All right, let's just dive right in. We are going to break down the absolute fundamentals of cryptocurrency. So if you've ever felt like you're on the outside of this whole conversation looking in, this is your ticket to finally understanding what it's all about.
So, the source we're looking at today kicks things off with a huge claim, saying that crypto is the biggest wealth-generating opportunity of our lifetime. I mean, that's a massive statement, right? So let's unpack why they think that.
But here's the thing. The source points out that despite all this hype, pretty much everyone, like 99% of people, are still just watching from the sidelines. So the real question is, what does that other 1% know that you don't? Well, that's exactly what we're about to find out.
Okay, first things first. To really get crypto, you have to understand the problem it's trying to solve. And it all goes back to the money we use every single day.
Now, this slide right here is super interesting. According to the source, our traditional money, like the US dollar, can basically be printed forever. And when you print more of something, its value goes down. It's that simple. Bitcoin, though, is presented as something totally different. Why? Because it has a hard cap. There will only ever be 21 million of them. Plus, no single government or bank controls it, and you can send it anywhere in the world in minutes.
And this number, man, this really hits home the core problem they're talking about: currency debasement. The source points out that over the last century or so, the US dollar has lost something like 97% of its actual buying power. This is the exact problem that an asset like Bitcoin, a store of value, is designed to fight against.
Okay, but here's a really important point. Not all crypto is the same. It's not all just Bitcoin. The source actually breaks it down into three main categories, and once you get these, the whole space starts to make a lot more sense.
So first up, and the one everyone knows, is the store of value. This is Bitcoin's whole reason for being. Just think of it like digital gold. It's an asset where the main goal is just to hold its value over the long haul, protecting your wealth from that inflation we just talked about.
Second, you have something called decentralized finance, or DeFi. And the source has this perfect, simple way to think about it. Just call it programmable money. These are platforms like Ethereum or Solana that let people build financial services like lending, borrowing, or trading, all without a bank or a middleman. It's all just automated.
And the third type is stablecoins. Now listen up, because this is critical. These are not investments. You're not trying to make money on these. Their only job is to stay stable, pegged one-to-one to something like the US dollar. They're just the bridge that lets you move your cash into the crypto world and back out again easily.
Okay, so now you've got the what and the why. But how do you actually start looking into projects for yourself? Let's get into the beginner's toolkit. If there's one word you need to learn today, it's this one: tokenomics. It's just a fancy word for the economics of a token. It answers the really important questions, like how many coins are there right now, and how many more are going to be released later. Getting a handle on this is everything if you want to avoid projects that are just going to get watered down and lose their value.
So where do you go to find all this info? Well, your first stop for research, according to our source, should be a website called CoinMarketCap. You can think of it as your home base for research.
When you get on there, you don't need to look at everything. Just focus on a few key things. You've got the market cap, which is the project's current size. But the really important thing to check is the circulating supply versus the total supply. If you see a huge gap between those two numbers, that's a red flag. It means a ton more coins could hit the market, which could dilute the value and tank the price, just like printing money.
Okay, once you've got a handle on the fundamentals, the next essential tool is TradingView. This is simply where you go to look at the price charts for pretty much any crypto out there.
Now don't get intimidated by the charts. As a beginner, you don't need to be some expert trader. Just use it to see the price history. Look at the daily or weekly charts to zoom out and get the big picture. You can also make a little watch list to keep an eye on all the projects you're researching. It's super useful.
All right, you've done your homework, so how do you actually buy this stuff, and maybe even more importantly, how do you keep it safe? Let's walk through the practical steps.
The source lays out a super clear four-step process. 1. You need an on-ramp, like Coinbase, to turn your dollars into crypto. 2. You swap that for whatever assets you actually want. 3, and this is probably the most crucial step, you move your crypto off the exchange and into your own personal wallet. This is huge because it means you control your keys, not them. And finally, step 4, for your long-term stash, the absolute gold standard is cold storage, a little hardware device that keeps your crypto completely offline, safe from hackers.
And we're almost there. The final piece of the puzzle is just staying organized. Trust me, it's really easy to lose track of what you own and when you bought it. So the source gives us a simple way to stay on top of things. And you don't need some fancy software. The source recommends using the free portfolio tool right on CoinMarketCap. You just go in there and manually add every trade you make, what you bought, how much you paid, and then boom, you have one simple place to see exactly how your portfolio is doing at all times.
And yeah, I know, taxes. But staying organized is an absolute game changer here. A really helpful tip from the source: in many places, if you hold an asset for more than a year, it gets taxed at a much lower rate. So tracking everything makes that process way easier, and there are even tools that can help automate it for you.
So let's wrap this up with the same thought-provoking question the source leaves us with. When you look back in 25 years, with how much the world might have changed, will grasping these fundamentals today turn out to be one of the best things you ever did for your future? It's definitely something to think about.